My favorite charting platform is not the one with the most indicators, the most colors, or the flashiest interface. It's the one that stays out of my way when the market is speaking. Because after decades of trading through .com 2008 and COVID, I've learned that clarity is worth more than features, and simplicity is worth more than customization. I've used almost everything over the years: Bloomberg terminals, institutional tools, retail platforms stacked with options. And what experience stripped away from me was the illusion that better tools create better decisions. They don't. Better thinking does, and the right charting platform is the one that supports that thinking instead of competing with it. For me, that platform has been TradingView, not because it is perfect, but because it aligns with how I actually trade and think. What mattered most to me was not speed at the microsecond level or proprietary indicators, but clean price, reliable multi-time frame structure, and the ability to step back and see context without friction. TradingView gave me that when many other platforms felt like cockpits filled with blinking lights demanding attention I didn't want to give. When I open a chart, I want to see price structure and time, not a negotiation between 15 indicators arguing with each other. One of the biggest reasons TradingView became my primary platform is how it handles multi-time frame perspective. After enough years, you realize that most bad trades are not bad ideas. They're ideas taken in the wrong context. TradingView makes it effortless to move from weekly to daily to intraday without breaking flow or resetting your mental map. That matters more than people think. When context is easy to access, patience increases. When patience increases, overtrading decreases. No indicator will ever give you that benefit. Another reason is visual honesty. The charts are clean by default. You are not forced into complexity. That matters psychologically. When a platform encourages clutter, it quietly encourages justification. You can always find an indicator to agree with you if you stack enough of them. A clean chart removes that escape hatch. When price is unclear, the chart looks unclear. When structure breaks, it looks broken. That honesty aligns with how I approach trading now, which is not about prediction, but about observation and response. I also value how TradingView handles levels and structure. Drawing support and resistance marking ranges, tracking prior highs and lows, it all feels natural and durable. Levels stay where you put them. You can return days later, and the chart still tells the same story. That consistency matters when you trade across time frames and don't want to reinterpret the market every time you sit down. A good charting platform should preserve your thinking, not force you to recreate it constantly. There's also an underrated benefit that only becomes obvious after years in the market distance. TradingView is not inherently an execution platform for me. That separation is intentional. It creates a psychological buffer between analysis and action. I analyze calmly away from the impulse to click. When it's time to execute, I do so deliberately, not reflexively. Many traders struggle because analysis and execution are fused too tightly. A charting platform that supports separation can quietly improve discipline without you realizing it. Community features, ironically, are not why I value it, but they've taught me something important. Seeing thousands of ideas posted reinforced a lesson I already knew. Certainty is cheap, and opinions are abundant. That reinforced my commitment to trusting my own process. The value wasn't in copying ideas, but in seeing how often confident narratives fail. A good platform doesn't need to make you smarter. Sometimes, it just needs to remind you to stay humble. Over time, I stripped TradingView down to the bare essentials: candlesticks, a few moving averages at most, key levels, volume when relevant, nothing else. The platform supported that evolution instead of resisting it. Many tools fight you when you simplify. This one didn't. That compatibility with maturity matters. As you grow, your tools should get quieter, not louder. But here's the most important reason it's my favorite, and this is something most people miss. The best charting platform is the one that reduces emotional noise. TradingView does that for me by being stable, predictable, and visually calm. When markets are chaotic, I don't want my tools adding chaos. I want them to anchor me. I want to see what is not what might be if 10 assumptions line up. That calm visual environment has saved me from countless bad trades over the years. And yet no platform is magic. And this is where we need to go deeper, because the real question is not which charting platform is best, but why the same platform helps one trader and hurts another. How tools can either reinforce discipline or enable bad habits depending on how they're used, and how to configure any platform. So it serves clarity rather than ego. And that is exactly where we need to continue next, as we move from talking about my favorite charting platform into understanding how to choose and use a platform in a way that fits your psychology, your time frame, and your process, rather than chasing features that quietly pull you away from good decision-making and into overconfidence and over-trading. And that transition is where this conversation continues as we carry this sentence forward into the deeper principles behind choosing tools that actually support long-term survival and consistency in trading, instead of just looking impressive on a screen when the market is calm and everything feels easy. And that is where we go next, by understanding that no charting platform is neutral. Every tool quietly shapes how you think, what you notice, and how you behave under pressure. And if you don't choose deliberately, the platform will choose for you. The biggest mistake I see traders make is selecting a charting platform the way they select a new phone, by features aesthetics or what others say is professional, instead of by asking the only question that actually matters. Does this tool make me calmer, clearer, and more disciplined when real money is on the line? If the answer is no, the platform is working against you, no matter how powerful it looks. The first principle for choosing and using any charting platform effectively is alignment with time frame. If you trade higher time frames, your platform should make zooming out effortless and rewarding. Weekly and daily structure should feel natural to observe, not hidden behind menus or cluttered by intraday noise. If you trade lower time frames, your platform must be fast, stable, and visually clean enough that you're not processing unnecessary information while seconds matter. Many traders sabotage themselves by using platforms optimized for a style they don't actually trade, which creates constant friction and emotional fatigue. The second principle is intentional limitation. More tools do not create more insight. They create more justifications. Early in my career, I treated indicators like witnesses I could call to support my case. If one disagreed, I added another. A good platform will allow this behavior, but a wise trader will not indulge it. I learned to configure my charts so that adding complexity felt inconvenient. That friction protected me. If I needed an indicator, it had to earn its place by solving a specific problem, not by making me feel more confident. Confidence that comes from clutter is borrowed confidence, and it disappears the moment the market disagrees. Another critical factor is consistency across devices and time. A platform that looks different every time you open, it subtly erodes continuity of thought. One of the reasons I stayed with a single primary charting platform is that it preserved my market narrative. Levels annotations and structure remained stable. That stability reduced cognitive load. I didn't have to reinterpret the market from scratch every session. The market was changing. My framework wasn't. That distinction matters more than most traders realize. You also need to pay attention to how a platform handles silence. This sounds strange, but it's crucial. Does the chart look calm when nothing is happening, or does it constantly scream for action? Platforms that flash, signals alerts, and prompts condition you to feel like inactivity is failure. That conditioning is lethal in trading. A good platform should make it easy to do nothing well. When price is in the middle of a range, or behavior is unclear, the chart should look exactly like that unclear. If your platform makes uncertainty uncomfortable, you will trade to escape it rather than to exploit opportunity. Another subtle but important consideration is separation of roles. I strongly believe analysis and execution should not feel identical. When a platform collapses these two tightly, it shortens the distance between impulse and action. Over time, I learned that even a few seconds of friction between seeing an idea and acting on it can save you from countless bad trades. Whether that separation comes from using different platforms or simply different layouts, it matters. Tools should slow you down just enough to ask, does this still make sense? As your experience grows, your relationship with tools should evolve. If your platform gets more complex as you gain experience, that's usually a warning sign. Mature traders tend to simplify. They know what they're looking for. They don't need 10 confirmations. They need clarity and patience. The best platforms support that maturation instead of fighting it. They don't push you toward novelty. They allow you to deepen your process quietly. The most important realization I want you to take away is this. The best charting platform is the one that helps you say no more often than yes. No to marginal trades. No to overconfidence. No to urgency. When your tools support restraint, they become allies. When they encourage constant engagement, they become liabilities. The market already provides enough temptation. Your platform should not add to it. After all these years, my loyalty to a charting platform has never been about brand or convenience. It's been about psychological fit. The tool that keeps me grounded during volatility, humble during winning streaks, and patient during boredom is the one I stick with. Everything else is secondary. If this perspective helped you rethink how you choose and use charting tools, I invite you to subscribe to the channel so you can continue learning from real market experience rather than marketing hype, and leave a comment sharing what you struggle with most when using charting platforms: too much noise, too many indicators, or acting too quickly. Because awareness of that friction is often the first step toward turning your tools from distractions into quiet supports for long-term consistency.